Hello, my name is Kojiro. Welcome to my channel, Good Vibration. If you haven't subscribed to this channel, click the subscribe button for future videos regarding the law of vibration, trading, and the financial markets. Today, in this video, I'm going to talk scalping like a master with the law of vibration. So, mainly I'm going to perform 30 trades using the law of vibration. So before I do that, I am going to explain a little bit about the law of vibration and how it works. Okay, so there are two main forces that move and stop the market. These two forces are the ones that cause all the swings, all the changes in trends, the uptrends, the downtrends, the ranges, in general, all the ebb and flow of price through time in the markets, in stocks, commodities, forex, and even Bitcoin. So I think the first force, it doesn't need no introduction. It's the law of supply and demand. And pretty much everyone know what is the law of supply and demand. It comes from the branch of economics, the science of economics, and it's everything that has a price is influenced by this law, which states that when supply is greater than demand, the price will tend to decrease, and when demand is greater than supply, the price tends to increase. Well, that's in a general sense how this law works. And I say here it's artificial because it came with humanity, and it's artificial in that sense. It came with humanity when we became, a civilized, as a civilization, and we started trading and giving value and price to things. All started the law of supply and demand. So it influences everything that has a price, everything that we consider it has some kind of value, and from items, things, or even services are influenced by this law. And it is visible because in the sense that we can see easily the cause and effect relationship between in this law when it's operating. We can see the volume, we can see the quantities, and how this affects price of any underlying asset, including, of course, the financial markets, the stocks, the commodities, and everything that has a price will be affected. So, of course, this is a very powerful law, and we can see easily how it operates in the markets due to volume. When big institutions enter the market or they get out of the market, in a certain underlying asset, we see how this affects price. So generally, the modern establishment, academic and scientific establishment, acknowledge, of course, the law of supply and demand as something being very powerful that determines the prices in the markets of everything. And it's very powerful, of course, to understand this law when we are trading and investing. And the other force, it's the law of vibration, which it pertains to the natural realm, it's not artificial as the law of supply and demand that came with humanity, the evolution of humanity, and we as human beings, and as a human race, as a society, a socio-economic society. The law of vibration has always been there since the inception of the universe itself. It pertains to nature, and it is related to everything in nature. That's how the universe works, how nature works and regulates itself. It's through the law of vibration, which is a universal immutable law. In many cases, I say it is invisible, because most of the time we cannot see the underlying cause, but we can see sometimes the effect of many of these when we're talking about the law of vibration in nature. So the law of vibration, well, it's not generally recognized or accepted by the scientific or academic modern establishment as we know, as science as we know it today. And university and institutions generally do not acknowledge the law of vibration, and that is mainly due to the scientific method. And well, I'm talking about this because it's really important to understand this, and then to have a wider view about the law of vibration and to understand the law of vibration. So I took out this from Wikipedia, the scientific method, and it says, I'm going to read here, I can quote here a paragraph, and it says, the scientific method is an empirical method of acquiring knowledge that has characterized the development of science since at least the 17th century. It involves careful observation, applying rigorous skepticism about what is observed, given that cognitive assumptions can distort how one interprets the observation, and it involves formulating hypotheses via induction based on such observations, experimental and measurement-based testing of deductions drawn from the hypothesis, and refinement or elimination of the hypothesis based on the experimental findings. These are principles of the scientific method, as distinguished from a definitive series of steps applicable to all scientific enterprises. So they have here some guidelines that all known science, modern science, has to follow, in their experiments and in their proofs. Well, it all starts by, first you define a question, then you gather information and resources based on observation. You then form an explanatory hypothesis. You then test the hypothesis by performing an experiment and collecting that data that in a reproducible manner. You then analyze the data, you interpret the data and draw conclusions that serve as a starting point for new hypotheses. And this is how modern science evolved, because some scientists work on the work of other scientists that have realized these experiments. Then you publish results and then consult a peer review and all this stuff. Then you have the retest, frequently done by other scientists who acknowledge, the theories that they are still, valid in a certain given time. But this practically, in a few words, a scientific method says that everything that cannot be measured, that cannot through experiment, and can be proven, through that same measurement and experiment and the gathering of data, it doesn't exist. Basically, that's what it says. So it doesn't exist until it can be proven. So it's, it's somehow how how modern our own modern science it's all about, and it has been this way since at least the 17th century, and it's a very materialistic point of view of the universe. It's a materialistic view of the universe. So of course, due to the scientific method, the law of vibration it's not recognized as it is by the scientific and academic establishment, or modern science, as we can say, because it is difficult to prove, because it has to do with very complex cycles that are not really easily measured and tested and replicated through the standard of the scientific method. So, of course, economic researchers and economists and all the academic establishment recognize only the law of supply and demand as the only force that moves the market and prices in the market. And of course, we have to recognize it's very powerful, but it is not the only thing. This also exists, and it's much older because it comes from nature. So this is important to keep in mind, the scientific method, and how it, since the 17th century, created a split in modern science. Well, in science, because modern science is based on the scientific method. So, in the past, ancient civilizations, advanced civilizations, they understood that what they knew or understood as science, knowledge, and wisdom was one whole thing. So they included what we understand as modern science, but they also included all the realm of phenomena. That includes, the universal immutable laws and other things that are not classified as modern science, mainly because they cannot prove it today, and because we don't have, maybe still we don't have the technology and the instruments to measure them and to gather data through an experiment and prove that they exist. So, ancient civilizations, although primitive and rudimentary, they did understood this, that there was that science encompassed everything. There was a whole science. But then in the 17th century, as we saw there, due to the scientific method, there was a definitive split in this science, and it split into what we know today as modern science, which I already explained was somehow artificial in that sense, the visible stuff, in the materialistic view of the universe that dealt with mainly the tangible, the measurable, that deals, of course, with matter and all that is related with matter, with the body, with quantities. And a scientific method applies to everything that's science, including, biology, physics, chemistry, and of course the economic sciences. So this is our modern view of science today. That's only half of the real science, because, the other half has stagnated since the 17th century because there's no evolution. There's a lot of evolution here, and of course it's not bad in itself, because thanks to that evolution and advancement, we have the technology we have today. For instance, computers, we have wireless technology, we have energy, we have a lot of things that make life easier in many ways. So it's not bad. but it's not complete because we left out, since the 17th century, almost 400 years ago, the other 50%. That included all that was natural, the invisible realms, the immaterial, intangible, or the not so easy to measure stuff, as is, the law of vibration. The ancients knew that it was there, but it happens that it's not easy to deal with, in an experiment and replicate, the results. So it's not easy. So until it is proven, it doesn't exist. And of course, this includes also things like ether, the spirit, the soul, the existence of a superior being, a creator, and of course God in itself, because we can prove through science that God exists. And in this realm, of course, exists the phenomenon of the mind, and consciousness, which we cannot measure or explain also. And here in the science, we talk about the brain, and the brain as an organ, and all the brain cells, and the little organs within the brain, the two hemispheres, and the hypothalamus, the pineal gland, and all these organs within the brain. But here we talk about mind, consciousness, and there are two different things. But these are not quantifiable as as the brain itself, that we can see, we can touch, and we can study. So modern science is based in this realm, but we left out the other half, which deals with universal immutable laws, with equilibrium, with harmony, and with the underlying structure of the universe. And this is much more older. So we see thinkers or philosophers like Pythagoras, for instance. Well, Pythagoras was a mathematician also, and that includes this. But at that time, this was still a whole science. So he was also a mystic, and he studied also this stuff here on this side. And when I talk about ancient civilizations, well, I'm talking about the ancient Egyptian civilization, I'm talking about the Sumerians, the ancient Vedic civilization, the ancient Chinese civilization, with understood and were advanced in their science, knowledge, and wisdom. So in the 17th century, we have this split here. And of course, this kind of stagnated. And of course, logically, this overdeveloped in the last 400 years. And this was mainly due to, because all support, all grants and sponsorships go to this side here. But in my opinion, in the future, they will have to come together, to have the full potential of science. Because science, all this belongs to science, is the same. It's science. Not only this half, but also this realm here, also this stuff here. And at this point in time, although we in technology and science we have advanced, this kind of science here, we kind of see that there's need, because we have in the modern world some phenomena like the quantum physics, and where the particle behaves also as a wave, weird stuff that starts happening that puzzles modern scientists, because they are not so easy to understand, because those at that realm, the very small quantum realm, it seems that these two things that are science start to mix together. So they start to have some mysteries there that they cannot figure out. So that's why I say that in the future, maybe it has to come back together to fully understand science and have the full potential of science as a civilization and for the good of all humanity. So, well, that's basically what I have learned, through research, and many people may not acknowledge this, but it's very obvious. And well, the law of vibration, I mentioned this because the law of vibration deals with this side here, and it's not very easy to measure. It's very complex phenomenon. Okay, so let's go ahead. So let's have a quick review about the law of supply and demand. So everything in existence that has a notional value and has a price, as I mentioned before, is affected and influenced by this law, the law of supply and demand. And important here to understand is this word notional, because it is somehow subjective. It's not objective, it's subjective, because we give value to things. It might not be valuable to everyone. You can have an alien from 100 billion light years away from us, and he comes here to Earth, and he might see gold, and he actually don't think gold is something valuable. So the value we give to things, it's notional, because we think as individuals and a collective, as a society, that it is valuable, and we tend to accept. So that's how prices are fixed. They start, pricing things, and prices start to move thanks to this law of supply and demand. But it's notional, and somehow it's subjective to a point. So that's important to understand. It's a pure human nature phenomenon. And at any given moment in time, well, in a general sense, to understand better the law of supply and demand, when supply is greater than demand, price tends to go lower, of course, and when demand is greater than supply, at any given moment in time, price tends to go higher. If we're talking about any underlying asset, anything. It can be an item, it can be a service, it can be anything. Real estate, everything. Works of art. And that's why works of art are so expensive, because they are original, they are one of a kind, and they have almost zero supply. They're only one. They're unique. So, it price, because they are so little in existence, they're very expensive. They go into the millions of dollars, for a Da Vinci painting. So, of course, this is how we can see this every day in the markets, financial markets, and trading. We have to recognize that this is a very powerful force, but not the only one. It's not the only one. And of course, another example we can give here is that, imagine we have peaches, the fruit, we have peaches. And in harvest season, when everyone is picking the peaches from the trees, they are collecting the peaches, then they are going to the market and trying to sell them. Of course, this will cause an increase in supply. So that's why always in harvest season of any fruit or vegetable, price tends to go lower. But as soon as supply start as harvest season ends, and as soon as supply starts to decrease, there's a point there when demand starts to be greater than the supply. So at that point, it becomes an out-of-season fruit, and the price of that peaches tends to go higher. That's usually how it works with everything. So actually, real estate also, for example, because real estate, that's why Manhattan it's more expensive than other cities in the United States, because there's a greater demand to live there, and that makes it price are become higher through time. Okay. So the other force, let's have a quick review here about law of vibration. The law of vibration is a basic way, a mechanism that the universe and nature uses to organize itself and all its different processes for a proper and stable functioning. And it does this, in hope of achieving long-term sustainability and preservation. And as you see, nature is very wise, because it never tries to auto-destruct itself. It might happen, but it tries to not auto-destruct. So it does this to reach some type of sustainability and preserve itself. And its main objective is to counteract the effects of chaos and entropy in any process. And this applies to everything in existence. It can be also, science itself, as we know it. There's physics, chemistry, biology, the movement of stars, our human bodies, everything that functions, because we are part of nature itself. So the seasons also, weather, everything works and is influenced by this law, which is not recognized as it should be, but it is there because it makes part of the universal immutable laws. And it does all this to create a state of harmony, to counteract the effect of chaos, as I mentioned, and to create harmony, to create balance, and to create equilibrium. And this is how the universe functions and works and tries to, preserve itself. And it has done a good job, because the universe is, we don't know exactly how old the universe is, but nature itself, but it has done a good job, because in all those billions of years, it has not still auto-destructed itself, and is still growing and expanding. So, the law of vibration, everything I have mentioned here about the law of vibration, this works in cycles. That's the way it works. And when we talk about the law of vibration, we talk about cycles. We are talking also about movement, about motion. It's something that never stays at the same point or at rest. It's always in motion, and it's always changing. And it affects everything, organic and inorganic. It affects everything. So here we have an example of how it works. We have time, because everything works with time. Time is always passing. And we have two extremes. Here we have two extremes. And extremes in nature are bad in itself, because extremes, if you don't correct extremes, it will end causing chaos, entropy, and at the end it will cause destruction. And the process or the system will be destabilized, and it will, auto-destruct. And nature doesn't want that to happen, and it has this mechanism to try to, maintain this, because it wants to maintain this, preservation and balance to infinity. So imagine we have two extremes of anything in existence. You can imagine, you can think of and it always have the same movement. It comes here because it is always in a moving state. It's never at rest. And as soon as it reaches an extreme point, it cannot stay here forever, so it will try to compensate and come down here to the average point, to the midpoint, to the harmony, balance, and equilibrium. But it cannot stay either here forever. It has to move. So its movement will cause to come down here to another extreme, and it repeats itself. And there are many phenomena in existence that we can think of. I'm going to give a simple example here. For example, someone goes out to work out and he's going to jog. He's going to run. And as soon as he starts running, his core body temperature starts to rise. And in a few minutes, it reaches an extreme level here. The body, through the law of vibration and of course through the bodily functions, because we make part of nature, knows that you cannot stay at that level for a long period of time, because if you do, you will die of hyperthermia. Hyperthermia will kill you. So that's why we have sweat glands, and we start sweating, and our heartbeats, start pumping blood through our body and all our system, to cool it up as fast as it can to bring down temperature. So when this happens, it compensates and tries to balance itself again. And body temperature starts dropping to a normal temperature there. So this is how it works. And in the other hand, if we go to the North Pole in winter, where it's very cold, we have a lot of snow. So the core body temperature may drop or decrease rapidly. When we hit an extreme level here, for instance, we can die from, in this case, will be hypothermia. Then, some bodily functions and some hormones are triggered there in our bodies to compensate and start rising the body temperature again. That's how it works. And it maintains, something like this. And many things, seasons, we start from spring, then we hit an extreme in summer, very hot. But it cannot stay there forever, and then we come down to fall or autumn here. Then we go down to winter, which is at another extreme, very cold. Then the cycle starts all again, starts to go up, and it moves to infinity, because between the two extremes in this movement, cyclic movement, there's always a midpoint. So if you calculate this to infinity, it has an average, and that's how nature works and compensates. Do not let do not auto-destruct itself. Okay, so when we talk about cycles, we're talking about circle, which is has the same meaning. And I talked about this in another video, so if you have time, you can later check that video. And we have a circle, which is a cycle, of course, and this is the same. This is the equivalent to a sinusoidal movement, sinusoidal form. This and this is the same thing. But when we talk about cycles, we're not talking about only one circle, but many circles. So you can put them together like this, and this is how a cycle moves. And in nature, including the financial markets, we have cycles of every size, of every length, of every amplitude, acceleration. We have many types of cycles in nature, and of course, many types of cycles in the financial markets, in stocks, in commodities, everything. There's a lot of cycles interacting there together and that's what makes the charts that we see. Because when we trade, we don't see so neat cycles like this. We see in our charts sometimes the price action that resembles, some people might say a lot of chaos, but there are a lot of cycles there. What happens is that what we see are all these cycles added together. And when we add all those cycles together, these are only 3 here, but in reality there are a lot of, hundreds of cycles in any underlying asset when we're trading or stock that influence and interact together the outcome of price, plus, of course, the law of supply and demand. So all those things added together at any given moment in time, we get this, which is more familiar to us when we as traders, because and we cannot see all those little cycles, very uniform as we saw, here. We see, different things here, but there are cycles there. There's a smaller one here, and here the impulse, another small cycles. So there are cycles within cycles, and I think this is what Mr. W.D. Gann meant when he said wheels within wheels, because he's talking about the low vibration and cycles. So there are cycles within cycles. Here we have another one, but these little ones make up this big one here, which is this swing here. We'll have some middle ones here. 2 middle ones make a larger one, and this is what make up the price action we see in our charts. And of course, when we're dealing with cycles and we're talking about financial markets and trading, we want to, of course, enter in a position, on a long position here. We want to buy here, and we want to sell here. Of course, to have a difference here, we have a gain and profit. Or also, we want to sell here, enter into a short position here, and buy here, get out of that position back down here. You have a difference, a gain, and a profit, and that's how we do. But when we add all those cycles, we get what we see in our trading charts. Now it's not so easy. It's something complex to understand and decipher all those cycles. And they make what we understand by the law of vibration in the market. So, well, I think this is appropriate. I mentioned this. This is from another video again, and if you want to, you can watch that video later. But I'm going to review it here because I think it's very important for the understanding of the law of vibration and trading and the financial markets. So the first paragraph is from the Epinomis of Plato. I'm going to read it now. I'm going to quote here. So it says, "To the man who pursues his studies in the proper way, all geometric constructions, all systems of numbers, all duly constituted melodic progressions, the single ordered scheme of all celestial revolutions, should disclose themselves. The revelation of a single bond of natural interconnection." And he is implicitly talking about the universal immutable laws, of course, and the law of vibration, of course. He gives a hint here of the law of vibration. And this second paragraph here is from Mitzi DeWitt, from an article in her website. She's a musician and she's a seeker also. She's not a trader. And she is talking about Plato's words, these words of Plato. So I'm going to read here a quote what she said. She says, "Plato's words reflect the ancients' view that there was a sacred canon of proportions, a harmonia, which interconnected the macrocosm and the microcosm, from which was revealed a knowledge of the stars, the planets, the earth, the seasons, and man himself, and that no understanding of this sacred canon was possible without the 4 keys of geometry, arithmetic, music, and astronomy, all 4 being necessary to unlock the secrets of universal laws. So again, she's talking again about these immutable universal laws, and about the law of vibration, of course. So, well, it's important I mention this again here. It is also in another video, so if you have time later, you can check that video. Okay, let's talk about scalping. This video is about scalping. So, when we talk about scalping, when we trade, we are dealing with the smallest of these cycles. And I know there are smaller cycles still, because I have researched that go, into what will be the quantum world of realm of trading. And and I'm not going that far down, but I know there are other cycles that go into that realm, into the quantum realms trading that belongs to, to high frequency trading, where they trade, in the millisecond range. And it's not done by humans, it's done all by algorithms and computers and machines. And, that's a whole different thing. So I'm gonna talk about, the smallest cycles that can be traded manually by a human. And here we are not talking about high frequency trading. We are talking about, ultra short trades in the realm of, human trading. So scalping is all about very short duration trades, and where the trader aims for small gains and profits. And of course, due to this fact, the trader must enter several times into the market, to compensate for those small gains and, make significant profit and gain. Also, it needs a lot of precision and accuracy to be profitable, because it's very difficult. I believe it's, trading in general is difficult. But when we talk about scalping, we're talking about the most difficult technique in trading, because you need a lot of precision, you need a lot of accuracy to be profitable. It happens very fast, lightning fast. You don't have time to think. And it's not easy in general, it's not for everyone. So precision and accuracy are a must in scalping. And it's very intense, and not for the faint of heart. There's a lot of tension, because it's very, as I mentioned before, very fast, very dynamic. Everything happens lightning fast. You don't have time to think. It's only reaction and reaction. And you have to know what are you doing. You have to understand what you're doing. And of course, you get a big adrenaline rush. So it's not for everyone, but it's fun. And for me, it's fun, and it reminds me of the Wild West, in a gun deal, because it's all about technique, it's all about precision, it's all about skill, it's all about speed, and it's all about, you either have it or you don't. You either win or get killed. It's like that. Very fast, so you have to have it. It's not easy, but if you manage to do it right, it's fun. That's scalping. So now let's talk about the scalping exercise. So I'm going to perform 30 scalping trades using, of course, the law of vibration, the cycles, and the technique I use. This technique is the same I use, in longer time frames when I trade, and allows me to know, the changes in trend, usually before they actually happen. And it's a high probability technique method, and it's very precise and accurate. So of course I wanted to research down, into the scalping realms to see how useful it will be using the law of vibration in scalping. And it works fine, in longer time frames, because you can know the swing points or pivot points before they actually happen, with a very high degree of accuracy and very high probability. So in this exercise, I will be using this, I will be performing 30 trades, real-time trades. I am going to aim for 5 ticks, which is, the scalper's profit, which is around 4 ticks. It's really 4 ticks, but I am going to go for 5 ticks because I have to compensate for commissions, fees, and other costs. So that extra fifth tick is to compensate for costs. And I will be performing this in the micro S&P 500 futures, which is the smallest contract in the future S&P 500 futures, and where 1 tick equals to $1.25, and 1 point equal to 4 ticks or $5. So the profit of one trade will be 5 ticks times 1.25 will be around $6.25. This is obviously the gross profit, not the net, because then I have to deduct their commissions and fees and other stuff. And the stop loss, I am going to use twice as much as the profit of 10 ticks, and that will be $12.5 for each in each trade. So since I enter, I know how much I'm going to win and how much I'm going to lose if I lose, and how much I'm going to win if I win, of course. And that's good to know. It has a risk-reward ratio of 2 risk or to 1 profit, which is actually not very good. And but you have to use this kind of ratio if you are going to scalp the market, because if not, you're gonna get stopped all the time, most of the time, if you use a 1-to-1 risk-reward ratio, or if you use more risk to 1 profit. It cannot be possible, because profits are, when you're scalping, you're going for small gains. So the best way to do it, in my opinion, is to have a 2 risk and 1 profit. It is not a good risk-reward ratio, but in the other hand, the good thing is that this method has a very high probability of success and a very high rate of accuracy rate. So that compensates for the fact that the risk-reward ratio is really not very good. And I say the probability of success and the rate of accuracy is somewhere around 80% to over 90%. That's the range, I think. The success rate and accuracy rate of this method of using the law of vibration in scalping is around between 80% and over 90%. Okay, so my max acceptable loss will be 5 failed trades, and that will cancel the experiment at any given point during the exercise. When I hit 5 losses at any given point during the experiment. Before reaching the 30 trades, I failed, and I will cancel the experiment. And it will be a failed exercise, and I failed. A total risk will be 5 trades, because that's why I'm willing to lose for this experiment, and that will be around that is $62.5 a total risk if I lose 5 trades. That's the gross loss, because the net loss will be, well, I think around $70 or a little bit over $70, which is not much, you know, for sake of the of this exercise. It's not much, you know, for the sake of learning and experimenting the law of vibration. It's not much. Yeah, it will be around $70, accounting for commissions, fees, and maybe a little slippage in the stop loss there. So the minimum accepted accuracy will be, you know, 5 over 30 trades minus 1, so that will be around 80. That's around 83.33%. So my success rate will be has to be over this 83.33%, or of course it will be a total failure. So, well, no more talk. Let's go to see how I do in those trades. Okay, here we are. So, our first trade. I'll place it here. Okay, we're in. Go for 5 ticks. There it is. We have a 10 tick stop loss. And okay, there we are. We're out. It's very fast. You can see it takes a few seconds. There we go again. The next signal. Right here. Red. Five ticks. There it goes. And that's where the field there. Okay, we're in. As you can see, sometimes it happens all very fast. Always. Yeah. Sometimes the signal comes in counter trend. Okay, I'm out. I have 2 trades, 2 wins so far. Couple of seconds. We'll watch for the other signal. Place my order here. Okay, we're in. Very fast. Okay. We're out. Okay. 3 trades, 3 wins so far. I'm gonna look for the next one. There we go. There's my order here. So my signals and my calculations, well, I have another screen. I'm not showing the screen there, but there I have all my other stuff where I have my calculation. Charts there. I know exactly due to the loud vibration or to place the order here. We're in again. If you notice, I'll leave this trade went positive immediately. Okay, we're out. 4 trades, 4 wins. Sometimes it's awkward, you know, to have the confidence to trade, because if you take a look at the price action, I'll place another one here. Well, it's a downtrend. We're trading against the trend. Okay, we're out. Oh, that was fast. Less than 1 second, I guess. 5 trades, 5 wins. So, well, I'm in again here at this point. Okay, I'm out. You see, it's very fast. You don't have time to think. Just place the order. You know how much you're going to win. You also know how much you're going to lose. So far, 6 trades, 6 wins. I'm trading counter this here. Oh, place my order here. And it's difficult at the beginning because you have to learn to trust the signal. Okay, I mean, here it came. It shouldn't go more than 4 or 5 ticks against you. The cycle is small. Then it goes its way. Okay, I'm out. 7 trades, 7 wins so far. Okay, well, it's been nice scalping, you see. So it's very fast. We're using here this function. Here this 3-minute chart. Place the next order here. And wait. When it gets filled, well, there's nothing you can do about it. Or either you get takes out your profit. You know, it hits your take profit, or it will hit your stop loss. Okay, there we are. I'm out. Okay, that was fast also. So in average, it is like 5 seconds each trade around. Some may take longer, some may take less than 5 seconds, but I believe in average it's like 5 seconds. I'll place again here. I think I use this one. Okay, there we go. I got filled there. Oh, that was. That's why you cannot trade one-to-one with reward rating, because due to momentum and volatility, sometimes, well, most of the time, it will take out the stop loss. It's very difficult, and really, I don't like to trade without a stop loss. Okay, that was fast also. Oh no, that took a little while. Was on the long side of the trade. So far, 9 trades, 9 wins. 219 to short here. Let's see how I do. I'm going to pair out here in this trade. And okay, I'm out. 10 trades, 10 scalps, 10 wins. Here's the next one. Still there. Okay, there we are. And I usually know I'm in trouble when it starts, you know, going down 5 ticks against me. Very fast. Okay, there we go. Okay, that's fast. 11 trades, 11 wins. Go to the next one there. Place my order here. So wait for that. At the Wild West, so like on a gun deal. Without being the move. So here I'm trading the I'm trading these one of the smallest cycles there is, you know, that I identified, and it's very small. It's like a little impulse you get. Okay, coming in there. Let's see. All happens very fast. But for me, this is too scalping. Small gains, and I go for, you know, a lot of trades. Okay, we're out. Ah, that was fast. That was fast. And it may seem easy, but believe me, it is not. It is not. It's not easy. It may seem easy here in the video. Well, you can try that. And well, it is not easy. Takes, you know, time to figure it out. I'll place my next order here and go short. Okay, here we go. Oh, sometimes that happens due to volatility, allow supply and demand. Now they're pushing there. But this whole cycle is, there we go. Okay, it's robust, so it works fine. 13 trades, 13 wins so far. On to the 14. Oh, that was fast. Okay, here we go. Due to the low vibration, that little impulse of 4 or 5 ticks. So now that variation there is what traders call the calculus profit. Okay, there we go. There we go. 14 trades, scalps, 14 wins. Okay, let's move on. Place here the next trade. Okay, let's fill there. Come on, come on. Okay, amount. Well, yeah, this is fun. Well, it's fun when you win. 15 trades, 15 wins, going to the 16th one. Let's see. There we go, there we go. Boom. Okay, we're in. I'm inside. Okay. Oh, okay, this is one. Got me out. Well, it happens. We're entering in here. Very fast. The next one. Okay, there we go. Oh. One against. Come on. Have to work, you know, the cycle has to work fine. Usually it works fine. So we have 16 trades until now, 15 wins, 1 loss. Come on, come on, come on. Yes, yes, come on. Yes, that's it. Okay, they're out. Well, I was a win also. Go until the next one. Here, if you notice, I changed to the 30-second charts because I was trading the 3 minutes. So it's my order here, and well, I realized that I could, oh, there we go, come on. Okay, we're out. 18 trades, 17 wins, 1 loss. And I realized the 3 minutes was too slow, to show the variation. So I changed to to 30-second charts. The bar, each bar is 30 seconds. There we go, humming again. Come on. One, two, come on. You have to go down. Oh. Sometimes it's awkward because you see the price action in the setup. Okay, we're out. I'm out. 19 trades, 18 wins, 1 loss. And I mean, oh, that was fast. Come on. And come on. Well, sometimes it takes longer. You see. Come on. Oh, help me out. Okay, well, it happens. Okay, that's 20 trades, 18 wins, 2 losses. Here's the next one. Come on, yes. Harder, okay, out. There we go. 21 trades. How much wins? 2 losses. I've lost so far. And 19 wins. So I was saying it's awkward because weird because you trade against the trend. Sometimes the price action, it's against you. Okay, get filled there. That was so. Come on. There we go. Okay. 22 trades, 20 wins, 2 losses. Okay, here we go again. Got filled there. Boom, out, we're out. 23 trades, 21 wins, 2 losses. Okay. And it's very fast, you see? These trades are lightning fast. Seems easy, it is not for everyone. There we go, one winter short. Come on. Oh. Okay, I'm out there. In 4 trades, 2 losses, 22 wins. Oh, that's a good average there so far. Hopefully I'm gonna reach the 30 trades. I'll place my order here. Wait. Come on. Come on. Okay, got filled there. Okay, I'm out. 5 trades, 23 wins, 2 losses. Low vibration, really low vibration. Okay, I got killed here again. I can determine, you know, when we'll change the impulse. I haven't talked here about trends because there are no trends there. It's impulse. And help me out there. Okay, 3 losses, 26 trades, 3 losses, 23 wins. Okay, I'm 4 trades. We got to 30. Next thing one there. As I said, okay, there we go. Well, no, that was. Come on. Come on. Okay. Out. It happens very fast then. I have my other screen, I mentioned before. I do my calculations. Here I'm showing the oh, there we go. Come on. Okay, I'm out. 28 trades, 3 losses, 25 wins. After 4, do 2 more. 2 more trades. Come on. It's very intense. Okay, let's go. Okay. Out. 1 more. 29 trades. 3 wins and 26 wins and 3 losses. Should be there. Okay, here we go again. Last one. Come on. Double shoulder. I know it's, you know, I know the place in time. I place my order there, and I know where it's gonna go. So look where I place my order before it all happens. And when it goes against you, well, it's normal, but you know, it actually. Come on. Okay. Oh, harder a little bit. Push a little bit harder there. Come on. Oh. You know, you're right, because almost immediately it goes in your favor. Sometimes it goes back a little bit. Couldn't be more than 5 ticks. Why trading 1-to-1, you know, that risk reward ratio is impossible to trade. Okay, I'm out. 30 trades. There you go, guys. 30 trades, scalps. Okay, so that was it. The overall balance for this exercise was 30 trades in around 1 hour. It took around 1 hour to perform those 30 scalps. You know, in average it was like 5 seconds. Very fast. I managed to make 27 wins, so 5 ticks each, for a gross total profit of $468.75 US dollars. Well, here I'm not accounting with commissions, fees, and other costs. Of course, that's gross profit. And 3 losses of 10 ticks each, for a total gross loss of $37.5 US dollars. So, well, it's a pretty good winning rate there. The vibration is, well, very accurate method once you have decipher and know how it works, you know, the cycles of everything. And well, the probability of success and accuracy rate was 90%, which is not bad, very good indeed. And well, it's not easy, not as easy as it seems, more complicated than that. Well, anyone can try it because you're not risking a lot. But if you trade a micro, but anyway, you can trade this, with more contracts. You can trade this using, a two-stage trade. So you take you liquidate one position, one contract, and leave the other to run, to catch a few more points there. And well, also you can trade this with the mini contract, which is 10 times more. And well, of course, that's intense also, because bigger wins, bigger losses. But as you could see, sometimes I'm just listening to the signal there, which I'm watching my other screen. I was watching my other screen during these the trades I was performing there, and not really looking at the price action as it was, because it prevents me from entering, because I say, well, it doesn't seem to a good place to enter. But I was going only for 4 ticks, first profit. So I think, well, and because I have researched that whole cycle, and well, I had, you have to be confident in what you do, because if you don't trust what you do, it's difficult, especially if you trade. And it works not only, well, this is a small cycle, but I use other bigger cycles and bigger time frames, and it works the same. But I was trying with this experiment, this research I made, to see how deep it goes, in size cycles. I believe, that it goes pretty deep, almost very, very, very small cycles, smaller than this, almost into the high frequency trading realm of milliseconds. But that's very difficult, to trade manually. So I think this is a smaller cycle that can be traded manually by a human being. And you see, it was very fast. You don't even have time to take. You just see the signal there, which gives you the coordinates, so to speak, in time and in price. You place your order, and that's it. Once you get filled, you cannot do much about it, because it will hit your stop loss or you will hit your take profit. So that's the end story of each trade. That's why it's very fast. You don't have to think about it. Okay, I hope you like this video. If you like this video, well, click the like button there, give me a like there, and well, don't forget to subscribe for future videos about the law of vibration, about trading, and the financial markets.